It's time now for today's strategy session. U.S. stocks rising this morning despite the Sell America trade gaining traction on Wall Street. So is now the time to buy into U.S. stocks? Joining us now, Ken Mahoney, Mahoney Asset Management CEO. The big question for me this morning to you, Ken, do you buy the dip or do you sell the rally?
Sell the rally. I mean, we have so many things coming out. Just the report, that 2 minutes there of everything that's going on in the world. Like, we want to be heroes. This reminds us of 2022, not the political side of it, but, raising rates, 75 basis points. And our goal is to get through the other side of it unscathed as much as possible. So we're actually saying sell into rallies. Again, like we had the 2,968-point Dow Jones rally, sell into it, try to wait for a better setup. Right now, there's way too many forces upon us. I mean, we have Hurricane Donald that, it could tweet just moments from now and watch everything come undone again. And the problem really is, this finger pointing with the president. And yesterday, we saw with Powell. Look, we have not been the biggest supporters of Powell back in 2018, talking about, increasing rates, only do emergency rate cut, transitory, that didn't work out so well. But here, it's actually Donald Trump is the one with, spill in aisle 6, spill in aisle 9, spill in aisle 9. Oh, here, Powell, clean this thing up. And it doesn't work like that. So really, the president really needs, in short order, to get a deal. We keep on hearing like, oh, we're close to a deal, we're close to a deal. It's like a used car salesman telling his boss, like, oh, I almost got him, I almost got them. He needs to get a deal done. Otherwise, this is going to continue to unravel. So the short answer to your question, we would sell into rallies. By the way, some of the biggest rallies you'll have, the biggest rip your face off rallies, are in bear markets, which we're in.
It also raises the question, which deal? I mean, we're talking about multiple countries that still have tariffs, and China, of course, having the large and lion's share portion of those tariffs, the second largest economy in the world and one of our largest trading partners. So all of that considered, which deal is the market actually going to look to say, okay, this starts to set some precedent for us to see how the negotiations are going to go forward elsewhere? Oh, yeah. And by the way, other countries are going to catch wind of the deals that are being made for some of the other counterparts that are waiting for tariffs to come off the table.
Yeah, there's a lot to untangle there, but I would start off obviously with Japan. And look, this is done incorrectly to start with, right? There's a big Canada approach, and that little list that he showed everybody, we were thinking like rational, maybe 10% tariffs and kind of work from there, but instead 47%, 104%. It's just like, you might as well just, ban imports from China. I'd like to see a deal for Japan. I'm not sure that can happen or not, because at least that kind of solidifies Asia. The way to do this, though, obviously in hindsight, but it should have been thought about, is kind of moving up. The lowest hanging fruit would be, let's say, Argentina or Mexico or maybe one of our trading partners, and then eventually get to China. But instead, this big blast has really put us in a big way. So all the things that investors are feeling right now, unfortunately, they shouldn't really feel like this. But hey, 72% of Americans that voted for Trump own stock directly or indirectly, and they feel like just get passed along, especially Treasury Secretary's comments, Treasury Secretary comments like, oh, don't worry about it, you have to have some pain and so forth. They're furious. They really feel they got stabbed in the back. They did not ask for a world trade war out of this Trump administration 2.0. They wish they had Trump 1.0 is what I'm hearing.
Well, that's interesting, because I'm also hearing a little bit of a different narrative from the politician side of things. But having said that, I want to talk about at what point you turn more long-term bearish on the U.S. specifically. At what point do you start to say, okay, we really have to get out?
Well, it'd be earnings. Right now we're looking at probably economic recession and earnings recession. And again, we've seen, by the way, this morning, I thought it was pretty good. General Electric, 3M, you noted here. I was kind of surprised, but maybe, it's this kind of thing when you come limping into earnings and the bar is so low, that's probably a better spot to be with earnings. But the visibility, I don't know how they're going to do it. I know UAL, United Airlines, last week broke it out 2 different ways, the earnings expectation, the guidance. Well, if we have tariffs, it's going to be this, we have this, that. So again, it's really difficult, especially a lot of companies tell me they finally got over cleaning up these supply chains, right? 2020 with COVID messed up all supply chains. And here, self-inflicted, that's the hardest part I hear from business owners time and time again, is that the vendors are now hoarding things, suppliers are hoarding things because prices are going up. And the unintended consequences of this is more severe. And there are things that other dominoes are going to fall that we're not even thinking of. I don't think we came into this year on a bingo card thinking that a pro-business administration and less regulation would turn into this zoo that we have here. But then again, he surrounded himself with people that are really tariff hawks, and here we are.
And nobody in the checks and balances that Henrietta Trey's was bringing up with us earlier, nobody seemingly kind of pulling in the reins as well. And so I guess with that setup in mind, if you did see, because of the kind of self-induced juncture we found ourselves in, does that also mean that on the backside of this, if all of a sudden there are deals that start flowing through that allows the president to say, see, I did it again, is that enough? Is relief enough for it to kind of lead to a conviction trade that everyone would say, all right, rally's back on?
It's hard because, I try to always separate the personality of Trump and the policies, but they're one and the same, right? The way bombastic he goes against our allies makes it very difficult to get behind it. So maybe put a Band-Aid on it like we did with Paul's 90 days and you get those one-day rallies. Those will be sold into. Again, I think a better setup down the road when the VIX settles down at 30 something. That implies like 2.5% intraday movement. Good for traders, not good for investors. We'd like to see higher highs. I mean, we're so far off of actually putting any meaningful dollars to work. We'd have to see, again, I know buyers live higher, so to speak, but you'd have to start seeing the trends go higher, above the 200-day moving average, volatility decrease, and we're not seeing any of that. As you mentioned also too, about gold and all and the dollar being devalued. This is a real mess. And when we call it Hurricane Donald, the only question is this a hurricane category 2 or is this a hurricane category 5? And it's starting to look like a 5. I mean, just, run for the hills, evacuate type of thing, unless somehow they can get some deals very quickly. This can't last for weeks or months. He's got to really try to find a deal, and it's on him. It's not on Powell, obviously.